You brought out the Google problem, by the way, but it's obvious that he didn't consider this. He just got really lucky, in my opinion. However, I believe that if you own Apple now, you must accept the $20 billion that Google pays you annually, which is a 99% margin. If this antitrust decision against Google is upheld, you should probably think about the value of Apple without that $20 billion. Depending on the multiple you choose to apply to that $20 billion, that alone may be worth anywhere from $500 billion to $1 trillion. What's insane is that Apple is still trading at $214, which is 11 to 12% higher than its $185 price at the beginning of the year. The stock is only slightly off its all-time highs, having just recently fallen from its peak at $230 per share. I mean, this is just a huge sum of money that Warren Buffett and Apple both own. Warren Buffett has about $300 billion in cash, while Apple has more than $100 billion. Allocators are in the business of making trades, and he clearly has a better deal on this, whether it's the 5% he will receive on the $300 billion, or if he wants to purchase anything. Excellent work then. Let's move on to the federal judge who decided that Google had an unlawful monopoly in search and advertising. This is very important news. This might be the most significant development in the tech sector in a few years. A judge decided Monday that Google had violated the law in order to keep its monopoly on internet searches. As you recall, the DOJ filed this in 2020 during the Trump administration. According to the 227-page verdict, Google paid billions of dollars to third-party platforms like Apple and Samsung to be their default search engine, abusing its monopoly in the search industry. Therefore, maintaining the monopoly is more important than simply having it. This is known as traffic acquisition cost, or TAC. We have discussed it numerous times here. The lawsuit claims that Google handles almost 90% of all web searches, which I think we are all aware of. The business is contesting that assertion. Remedies for Google's actions are not yet included in the ruling. It will be decided in a later decision. Google will undoubtedly resist this. They might no longer be able to pay for Firefox or Samsung to be the default search engine, which would lead to a change in business operations. That will open up a lot of intriguing options. On X, Chamath and I were talking about them. This is very important news. I believe this will have a huge impact on the search engine sector. I know this because I worked on Mahalo, a human-powered search engine, more than 10 years ago. Steve Jobs picked it up in the middle of the night and began experimenting with it. Due to their tense relationship with Google, there were numerous reports that Apple wanted to get into the search industry. Steve Jobs was obviously quite angry when Google started to compete with Android. Additionally, Google produced Chrome, a rival to Safari. I don't think it's impossible that Apple will launch their own search engine after losing this $30 billion contract for Taxi, perhaps by purchasing DuckDuckGo. Braid features a search API, a fantastic search engine, and a crawler, of course. Unbeknownst to most, Apple has a crawler. My guess is that, like Amazon, Uber, and other businesses, Apple will grow their advertising network by purchasing a search engine and going it alone. What do you think about this, and what do you think we might see next? What are the implications for the downstream market, and will this verdict stand up? This Google ruling, in my opinion, is the most significant development in technology since the Microsoft DOJ ruling on Internet Explorer in 2000. Yes, since the consent agreement from 2000 effectively hamstrung this extremely ominous firm for almost 10 years while a variety of advances took place. I take it that they missed two enormous waves. Due in large part to the consent agreement, Microsoft effectively lost out on social media and then on mobile. It was incredible when they finally caught up and embraced SaaS and the cloud. However, there is a minor result here, which is basically a consent decree that places Google in handcuffs for a certain number of years, resulting in a few significant waves of innovation and new businesses that might not have been able to thrive without such a decree. The AI-powered search experiences you're beginning to see, whether they're from OpenAI, Perplexity, or a handful of these other firms, are an excellent example of this. However, the major result would be a dissolution of the business, similar to what happened with Bell. That is highly implausible, in my opinion. Therefore, I believe that you may safely rule out the huge split scenario. The point is that this judge will have power over a distribution between these two items, even if I believe the outcome will be less significant. Once more, I'm merely speculating, but I believe that both Republicans and Democrats will firmly back whatever comes out of this, and not necessarily because they have a grievance against Google. Though I believe it sets the tone for being able to check major tech in a very meaningful and effective way. They have more issues with other firms than Google, and that has significant implications for Washington, in my opinion. This morning's TSMC earnings were a new read. Due to high demand for the company's iChips, Taiwan Semi recorded a 45% increase in revenue in July over the same month the previous year. Despite being a significant outperformer this year, shares are currently fluctuating along the flat line. Naturally, one of their most important clients is Nvidia, whose stock has been slashed this week. Although it just had its greatest day of the month, the company's market capitalization has decreased by around $1 trillion since mid-June when it was at its peak. Let's discuss that name and many other semis in more detail. Stacy Raskin from Bernstein is now joining us. It's always nice to have you around, Stacy. Let's begin with Nvidia. Delays have been reported this week, possibly due to Blackwell's design flaws. Tell me what you think. What will it imply, and is it real? Yes, it appears to be enough real. There is some fire there, and there is plenty smoke. Other supply chain participants have provided us with some confirmation. Since Supermicro hinted about it, it appears to be genuine. It doesn't seem like a big deal, does it? It appears to be a small design flaw. It appears like they may have already resolved the issue. We may be delayed by 2 to 3 months. What that actually means, in my opinion, is that although some had hoped that actual volume shipments would occur in calendar Q4, it appears that they might occur in Q1. It's a little push-out then. Remember that even Nvidia is not always immune to this because it is a challenging task. We have had hyperscale capex guides in the interim, and they continue to rise. They weren't only made aware of this by the news article. All of those would have taken into account whatever is happening. It would have been part of it. It appears that Nvidia is trying to backfill and smooth things out until Blackwell actually launches in greater number, perhaps a quarter later, by expanding manufacturing of their current architecture, Hopper, which is in high demand. However, I don't believe it's a major structural problem. In terms of sentiment, the stock has obviously been affected. I believe there were several. One was simply a general decline in sentiment regarding the AI space as a whole. A lot of money is being spent, and people are beginning to wonder where the money is going. It is weighed down by the fact that the sentiment wasn't quite as encouraging as it had been. That's what's been happening. But I don't believe Nvidia has changed all that much structurally. I believe everything will work out because we have a little push out. Okay, well, as you say, demand is still present. What about the multiple, the stock itself, and our observations of it? From the viewpoint of someone like you, does that make it even more compelling? You see, Nvidia has never been very costly. It was about 40 times forward earning